Hey, traders, Nick Shaheen here looking at what? Palantir. Why? Because somebody asked. I did a video about Penn National Gaming. Somebody liked it and they said, can you do Palantir? I've done Palantir before, so if you've seen my videos before on Palantir, then you know my opinion of it. I'm a fan of the company. I'm never a super fan of anything. I'm never in love with anything. So my opinion is my opinion alone, and it's not a recommendation to trade. And I'm only commenting on the price stock action most of the times, and every once in a while I infuse a little bit of logic onto why this makes sense for the company or why it doesn't make sense. Okay, so this is a daily chart for Palantir. First of all, the company is not new. The stock is new to Wall Street. They have a book of business of I think last time I checked it was like 1.2 billion a year, which is pretty respectable in a new venue, meaning artificial intelligence, how to collect and use data. So the pandemic said to everybody, hey, you've been trying to digitize for a long time, dragging your feet. Get your ass in gear now, son. Okay, so everybody now rushed to the internet. Now suddenly everybody's got systems and flooded with data. What do I do with it? They collect all this information. They need somebody to help them make decisions with it. This is what this company and others like it do. But this one has the hand of the government in there, which is great because the government overpays for toilets. I'm pretty sure they're going to overpay for intelligent reporting systems. Okay? So fundamentally, it is not cheap. First of all, startups don't need to be cheap. Growth companies, I should say, not startups, don't need to be cheap. But when you go from 600 billion to 1.2 billion in 3 years, you're allowed to be expensive. You can't do this while skimping pennies or skimping. So what's expensive about it? It still loses money. So how can you tell it's expensive? It's 38 times its sales. The price. So the stock price right now gives it credit for almost 38 years worth of full year current sales. That's a lot of sales, but remember, Zoom was like 120 last year, and that was my complaint. Well, this year they fixed it because what happened? They grew into this valuation. So value is not a reason or a good metric for growth stocks. So ditch it. The reason to go long or short is not value. You shouldn't be looking. If you're looking for value, look for value stocks like Apple. You can say, oh, it's expensive here. Yeah, because it's established. It should be profitable. It should be more profitable as it goes. So if you want to complain about its value, it's a valid reason. But a company that's growing as fast as this, value is not a concern. Or I should say, it is a concern, of course, but it's not a metric for which I judge it on a stock basis. So daily chart, can I look at the chart and say, okay, there's something to happen or something not to happen? Of course. I can tell you that there's support into 22 and 21, and there's resistance where it is right now, going into 26. This closure time, I'm long. I've been long. I've covered a lot. I've stayed long. How? The last two positions I had were long calls, which are a little bit underwater on their own, but overall I'm still green. And I sold puts and put spreads, which are bullish positions that don't need rallies to win, and those have paid out. So I am long, but with house money. So I don't care what happens to the stock from the profitability perspective. I want it to rally, but I'm patient. I'm not adding. Why am I not adding? Because going into 26, it should find sellers, and more so into 27. How do I know that? Because let me show you the drawings I did before, and you tell me. Let me walk you through them. Boom, there it is. See these circles? They have been points of contention at some point in the past. Look at this cute little guy here. Ooh-wee. I remember that day. I was like, maybe I should buy it. Yeah, I did, but I booked my profits somewhere here. So anyway, all right. So points of contention, they do come and play, and it didn't come and play here, but it is here. So if I pull this over, I don't want to do it now. It'll take me half an hour trying to grab it and get frustrated. But I drag it over to here. Look where it would be, right there, here. So right above current price. So I expect them to fight over it. But look, I said, okay, so it could dip here. It didn't dip, but it should come back and then fight over this neckline. See the flat line? And then the opportunity. I even put it in a different drawing right here. This guy, this resistance, but also the opportunity. I drew these beforehand. So I haven't changed my mind. I don't want to buy it going into a failing point. This is a failing point. I want to buy it when the bulls prove to me that at least they can take that out on a closing basis, and then buy the breakout with knowing that there's going to be another wall up here. So if I know that, then I'm not chasing blindly, right? Like somebody buying it up here. What? I mean, what's your reference point? This way or that way? There's no reference point. They're just hoping for the best. All right, so how do I get more information? First of all, big picture, what I think should happen is it should fade a little bit, or I should say, if it fades a little bit, that's okay, even down to 2180. And then what? Come back to this failing point. Then you draw an inverse head and shoulder. You take that out, you're going to 32 and closing this gap, whatever gap that is, tiny little gap. This all alone is not a reason to chase it, but this would be an inverse head and shoulders bullish pattern where the machines can say, oh, I've got a pattern, I've got a measured move, let me walk towards it. So they're not going to go straight for it, although they could, which they shouldn't. This was bizarre GME stuff. They at least have a reference point. Target, selling points, resistance points along the way. All right, so how can I trade this? A, I can own shares for the long term. And when I own shares, I sell covered calls. B, I can buy calls, which is my least favorite, or buy call spreads, vertical, diagonal, calendar, whatever it is, at least spread the risk by doing a spread. Okay, it's slower profits, but guess what? Easier sleeping at home at night. Or my favorite is selling puts on bad days, and minus 2.5% is maybe a bad day. It's not really a bad day. It's falling from a high point after a long rally. On a bad day after a bad jag, maybe if Powell says trips up and says, oh whoa, if we get too hot reports, then I'll start considering, and then the market's going to go down, and then that's when you pounce. When people are scared, you say, I'll take your shares. Wouldn't you love? Do you want to know the levels? I sold puts at 18 and 16. So when it was falling, I don't know which time, but I know I did. So the worst that can happen is me buying the shares at 18 or 16. I can do that all day long with a quality stock. Or I can sell a put spread to limit my risk, which is what everybody should do that does not want to own the shares. If I didn't want to own shares, or I cannot own shares, I should not ever sell naked puts, because that's just how I would lock up my account and blow it up. So conversely, I would never sell a naked call, ever, or sell short naked, ever. No exceptions. And somebody asked me today, would you sell a strangle? Hell no. Not in this environment. I've seen what these people can do on Reddit, and I am not about to fight with stupid, because then they'll drag you down to their level and beat you with experience. I will not going down there. If I wanted to short a stock, like I did short NEO and CVX, second time on CVX, first time at 1. This one, I sold a call spread, so same thing. I short, but at least I know if I win, I make a car payment. If I lose a car payment. That would be one way to do it. Easy peasy, as opposed to just making a bet that could blow up your account by unlimited risk upside. That is crazy. All right, so that the comments are, it's a constructive chart. It's running into some resistance. And I think it will manifest itself in the next couple of days by sellers being hiding up here. So if tomorrow they find buyers, they should be buyers. See that orange line? That's the point of control on TradingView, which, by the way, is a good platform. I don't get paid to tell you about it. I do get to play with it, but it's pretty sophisticated and fairly easy to learn, and it's web-based. So it has a few bugs, but which one doesn't? But the point is, it shows the point of control, which is an automatic drawing of the volume bars. So these are volume bars down here. These are the same volume bars, only they tell me at what level they happen. So right away, I can tell that 24.4, or whatever that area, 24.2 is super important for bulls and bears, buyers and sellers. Buy, sell, buy, sell, buy, sell. And guess what? The whole area is. Look, they're all heavy users. So there's a big, giant node here. So as it falls into it, those buyers and sellers will be active, and it'll be like congestion. It can't just slice through it. Everybody's buying and selling, so it's like a traffic jam. So it should be support. The hard bounce level is here. That's clear. That is 23.4. I used to have a guy that complained that I said here and didn't say the number because he was driving watching my videos. I'm conflicted about that. I love the fact that he was watching my videos while driving. And then I'm thinking about it, but what if he crashes? Then he can blame me. So I don't want to. Anyway, I found that weird. So 23.3 is here, and 25.6 is here. Those are the two closest actionable lines for the fairly active trader. So this is a 2-hour candle. Now somebody who's faster than this, not me. Okay, so here we have slightly more information, like 24.2 might be an area of concern, of support, and an area of concern is 25, where you should find seller from 24.9 on. So that will be actionable, and you have to pay attention to who's in control at that level, because there could be, depends on what happens on the bounce tomorrow. If we bounce to 24.60, if 24.60 fails and they start setting lower lows, then the 24.40 will fail and they'll start looking lower low. So that tapers down like this to test that. Okay, so that's the shorter term trade. So we covered the stock from big picture, the macro. We talked about the overall market environment being so high. What do I mean by that? Okay, so I've done this so many times, I forgot if I actually did it, now that I say it. So this does not look like a point of entry with conviction to anything. I don't care how much you love the environment right now. This is chasing. So any stock you think is a good deal right now has to work inside this. So if this has a tizzy, your stock is going to have a tizzy. So the stocks will fall through no fault of its own. All right, so that's the macro. We took that out. The fundamentals, we talked about it a little bit. And then the actual trade on Palantir is that it's great recovery into a place where they should find sellers. But if they do, that's okay. That's normal price action. It should fade back into some support, and I noted the levels. And then ideally you want them to come back and tackle this guy here, hopefully before the market's correct, and immediately you will face resistance at two places, at 26 and rounding 27.7, let's call it 28. But the target should be 32 if this happens. That's it. It's as simple as this. So again, nothing here is an actual trade recommendation. All of this stuff is my opinion on charts, and I do not come from Wall Street. I don't even live on the East Coast. I don't know anybody on Wall Street, although I've been on a couple of shows where Nigerians were on the same show as me, presenters either before me or after me, I can't remember. But other than that, I'm an ex-engineer on the left coast in the California area. Later.